Financial statement analysis is crucial for assessing the financial health and performance of a company. Various stakeholders, including investors, creditors, analysts, and management, rely on these analyses to make informed decisions. Key techniques include horizontal analysis, vertical analysis, ratio analysis, trend analysis, and comparative analysis. Horizontal analysis involves comparing financial data over multiple periods to identify trends, growth patterns, and financial changes. This technique calculates the percentage change in each line item from one period to the next, helping to highlight significant changes and trends in a company's financial performance. Vertical analysis, also known as common size analysis, involves analyzing financial statements by expressing each item as a percentage of a base figure, such as total assets or total revenue. This method helps to understand the relative proportion of each line item, providing insights into the company's financial structure and efficiency. Ratio analysis involves calculating and interpreting various financial ratios to assess a company's liquidity, profitability, solvency, and efficiency. Common ratios include the current ratio, which measures liquidity, return on equity, or ROE, which evaluates profitability, the debt-to-equity ratio, which assesses solvency, and the inventory turnover ratio, which gauges operational efficiency. These ratios provide valuable insights into different aspects of a company's financial health. Trend analysis involves examining financial data over multiple periods to identify patterns and trends. This technique helps detect long-term trends in revenue, expenses, and other key financial metrics, enabling stakeholders to forecast future performance and make strategic decisions based on historical data. Comparative analysis involves comparing a company's financial performance against its peers or industry standards. This technique assesses the company's relative performance and competitive position by comparing key financial ratios and metrics with industry averages or specific competitors. Comparative analysis helps identify strengths, weaknesses, and areas for improvement. Financial statement analysis techniques are crucial for evaluating a company's performance and financial health. Key techniques include horizontal analysis, vertical analysis, ratio analysis, trend analysis, and comparative analysis. Each technique offers unique insights into different aspects of a company's finances, helping stakeholders make informed decisions and strategic plans. Understanding and applying these techniques enable a comprehensive analysis of a company's financial statements.